Introducing T accounts. How to post to the ledger. Now let me explain a few things. What is a ledger and what is posting? So the ledger is the main book of accounting. It is where all the financial accounts are kept. And an account is simply a record of a transaction. When we say posting, that is what we do when we transfer the financial data from the books of original entry into the double entry system used by the T accounts in the ledger. So a transaction is basically the trading activity that takes place between one business and another business. And the financial details of every transaction must be recorded twice according to the double entry principle. That is, for every debit you should have a corresponding credit. So that means that you will have in one account it will be a debit, and in another account it will be a credit. So what does debit and credit really mean? Now when you debit an account, it means that you're going to enter the data of the transaction on the left hand side of the account that is affected. And credit would mean that you will enter the data of that transaction on the right hand side of the other account that is affected. Okay, so there are some rules you will have to follow if you are going to be able to debit and credit correctly. If the transaction results in an increase in the business's assets or its expenses for that matter, then you must debit the affected account. However, if that same transaction results in a decrease in the business's assets or its expenses, then you must credit the affected account. Likewise, if the transaction results in an increase in the business's liabilities or its incomes, then you must credit the affected account. However, if the transaction results in a decrease in the business's liabilities or its incomes, then you must debit the affected account. Those are the rules to follow. So let's hear those rules again. If assets or expenses increase, what do we do? You debit. If those assets or expenses decrease, then you credit. If your liabilities or incomes increase, what should we do now? Yes, you credit. And if your liabilities or incomes decrease, then you debit. Those are the 4 rules to follow in order to post your information correctly. Yeah, I know you want to know what an account looks like. So basically an account is like a T, right? A sort of balance. You got, if you look, a line across the top and a line down to the middle. So it's divided in 2. Each side carries the same information. Day, account, amount. That's basically what the account looks like. So the left side of that account is the debit side, and you see that because you have the letters DR written at the top. Now DR obviously is short for debtor. Similarly, the right side will be the credit side. It will carry CR, obviously standing for creditor. So left to debit, right to credit. Alright, let's look at a transaction and see if we can follow those rules and get it done correct. So a big man store bought a truck for $8,000 cash on Wednesday, April the 1st, 2020. Right? So he has this nice truck. Anyway, how does this transaction affect the business? But notice the business got a truck in exchange for cash. So in reality, the truck, which is an asset, is now the business's own. So the business's assets will increase. And when the assets increase, what should we do? Yes, you're correct. You debit. You're going to debit the truck account. On the other hand, you should also have noticed that the business gave up its cash in exchange for a truck. Now, cash is an asset. So that means that the business assets of cash will decrease. And when your assets decrease, what do? Correct again. You credit. So clearly, we're going to debit the account called truck, meaning we're going to write on the left-hand side. And we're going to credit the account called cash by writing on the right-hand side. So let's see how that's done. So I have my truck account set up. I've reminded you of the size, debit left, credit right. The truck is an asset and it's increasing. Remember, we didn't have a truck before, now you have a truck. So on April 1st, how did we get this truck? That is what you have to write here. You have to say how you got the asset. So we got that truck by spending cash. And when we spent that cash, how much cash did we spend? We spent $8,000. So we obtained the truck for $8,000 cash on April 1st. That is clearly what's shown there. Now remember, every transaction must have two accounts. So the alternative account, or the other account, the corresponding account, sorry, is your cash account. So what happened here? We have to explain, now the cash was ours before, so we need to explain what happened to our cash. So what happened to the cash? We exchanged it for a truck, right? So on April 1st, we exchanged this cash for a truck. And that truck was worth $8,000, so we gave her $8,000 cash. So there you have it. We had a debit and we have a credit. And that's how simple it is. So until next time, keep practicing.